All right, good morning, everybody. Today is Thursday. And before we get there, today's market open is a buy. But let's see here. Uh, I don't know if price is gonna come back down. So I would rather take so the market open entry is a buy, but for I would rather wait for price to come down here. And again, this is only on a small account or an account I have, and I'm only risking $200 per trade. So I'm not taking this on multiple accounts. Um, so the market open should be, it's a little tricky, but I'll take a small position on this 30-minute EMA. I don't know if it's going to get to the 30-minute, even the 15-minute is okay, but yeah, but I would just say wait for the regular EMA and SAR rejection scalp. So that's what we'll wait on. So this market open is a bit tricky. Price is a bit too high, but the entry would be at this 30-minute EMA. Um, the what was I thinking? There's something here. We have today's pre-market high that is somewhere above here. So the pre-market high, so this entry would be at 514.7. Add an alert there. So the 10-point entry would be here. Again, I'm not taking for the pre-market highs and lows. I don't take them on any of my accounts. But anybody who takes the pre-market highs and lows, the 10-point entry would be or the model one entry would be at 514.7. All right, so the 30-minute or the market open is at a 1:1 risk to reward. And of course, for the market open, you go for a 1:2. All right, so there goes the pre-market high entry. Personally, I don't take pre-market highs and lows, but the model one entry would have been tapped in right now. And then, of course, you'd be waiting for the other models. But anyway, so I'm not taking the pre-market. So the small account or the account I talked to you guys about, the market open. So this one is almost up there at TP because entry is was at this 30-minute EMA. But anyway, I don't want to focus too much on the market open entry. I want to focus on the rejection scalps. All right, and then pre-market high would have hit TP for model one. Model two, this would have been the entry here. So model one entry was at 517, how I marked it up here. So model one entry was at 514.3. So model one was, and actually let me just, because either way I need to use this one. So 514.3, I think somewhere there. Model two would have been so model 2 you go for a 1:1.5 risk to reward. You wait for the trend change. So model 2 would have been this. Model 3 would have been this. So model 2 and model 3 would have been stopped out, but model 1 would have hit TP. And then there's the fourth model that I talked about that I'm starting to trade it today. So model 4. Model 4, you're waiting for a sell signal, a sell momentum signal, and that sell momentum signal is going to come up below this channel. So again, th that was just an example of how I would have taken the pre-market high sell. The only entry that would have hit is the Model 1. The best thing about Model 4 is that so you see like how, for example, here, Model 2 would have gotten stopped out. Model 3, which is what we go for a 1:1, would have gotten stopped out. And you see prices coming back down, right? So the best thing with Model 4 is that you can get stopped out of Model 1, you can get stopped out of Model 2, you can get stopped out of Model 3. And Model 4 is going to come when price has actually chosen a direction. Again, it doesn't mean that it's safer. It doesn't like you can still get stopped out of four models. But for example, here I'll show you guys how or where Model 4 would be. So Model 4 would be any. So since we're looking for a sell, Model 4 would be, and Model 4, you're going for a 1:2.5 risk to reward. Again, it comes on sometimes pretty much later on after price action has already formed. But that's again why you're going for a 1:2.5 risk to reward. You're going for a higher R in order to compensate for the distance. So, for example, right now, if a sell signal forms, you can see the distance between, and there goes that sell signal. You can see the distance between the Model 1 entry and then Model 4 entry is in this instance would be, so that would be Model 4 right there. So the distance is this is about 40 points. So the distance is about 60 points. So you're kind of getting in later in the game, but at this point, price normally has chosen its direction, and so Model 4 is the momentum entry. And that's why, again, right, because price has already chosen its direction, you expect a continuation. So I'd consider it either a continuation or momentum push. So those are the four models that I will be entering. I'm working also on a fifth model. Again, like I told you guys, the last 2 weeks have been in and out of break even for me. I've had a couple of losing streaks. And normally when I have a period like that, I normally go back and back test like more, more ways that I can diversify my accounts and all of that. So there's a fifth one that I'm working on, but the fifth one is based off of anytime there's like consolidation in the market. So the fifth one is based, and we've talked about that. So for example, on when was this day? 2 days ago. Yeah, this particular day right here, right? So on this day and on this particular day, we took some. Wait, give me a moment here. On this day, I want to see if there is a. Okay, wait. There is an SAR entry down here. I just don't want to miss any entry. Um, it's a monthly one. So this is a buy entry here if price comes back down here. 377 minus 10 is 366.9 or 367.9. So the 10-point threshold for this trade is this somewhere here. So this would be an SAR rejection scalp right there. All right, and you can see, so Model 4 would have hit TP. So you can see as much as, so in this instance, so for example, for me, who my main accounts are 200K accounts, and I got a 200K account to start this Model 4. So this one, I would have made 4K, would have lost 2K, 2K on Model 2 and Model 3 if I had taken the pre-market high. And the reason, and most of the losing streak that I've been on for the last 2 weeks, it's pretty much this nonsense right here, right? So I get into a trade and then price literally takes me out and then goes in my direction. So you can see literally this one. So it's not like I'm wrong in my direction. So typically I have a good hit rate of predicting the direction of the market. But the issue is that when I'm scalping, and I don't want to go back to intraday trading, when I'm scalping is that sometimes price will take me out and then keep going in that direction. So that's why, so right now I have 16 accounts. So those 16 accounts are separated into four separate copy or four separate primary accounts. So I have one account copying, I have three accounts copying from the model one account, three accounts copying from model two, I think four copying from model three, and like three copying from model four. So this way I'm able to diversify because like the last 2 weeks, if I hadn't diversified, even the last week, I actually diversified my accounts. So if I hadn't diversified, a couple more of my accounts would be, most of my accounts right now are at break even from being like up 5% in the last 2 weeks. So you can see here I would have, so 4K on model one, would have lost 2K on model 2, would have lost 2K on model 3. So again, that puts my overall accounts, like those three models, at break even. But guess what? Model 4 would have made $5,000. So again, model 4, this momentum, and I wanted to push this entry to go for 100 point, um 100 point push, but if I did this or if I start doing this, I may need to start thinking about doing break even or taking partials. But for me, it's like I really don't, my trading style does not involve taking partials or break even. But those are the four models that are right there. And again, there's another model coming up, a fifth model. So that is okay. So I was talking about that model five. So this particular day right here, we had this consolidation block that's right here, right? And I talked about here we were playing around with price was accumulating, right? The power of three. It was accumulating. We had this manipulation move to the downside here, which rejected off of an order block, off of a bullish order block. And then I was expecting price to keep pushing to the upside because normally when this happens, and we've seen it on some of the live sessions, we expect this, then it comes down here, then price goes back to the top of the range and then comes up and picks up an entry somewhere below the support of the accumulation phase and then pushes up. So that was my expectation this day when we were trading 5th August. I think that was Monday and even Tuesday. Actually, wait. No, that was Tuesday. Yeah, Tuesday, because I remember we were on the live session. So Tuesday, that was the expectation, right? But at 10 a.m. on Tuesday, I think that's when Trump started. I forget, there was a speech that Trump did, and I forget what he was talking about. But it caused a gap in the market, because even this day we took, I think, a loss. I think we took one loss or whatnot. But still, if I'm expecting price to go in X direction, right? Still, even after this drop again, this again would be considered sort of also another manipulation phase. Again, I was expecting price to keep pushing up back to the upside, right? So the idea is that if the idea is to first identify a consolidating zone. So like for today, actually, I'll get back to that. So to identify a consolidating zone, to identify a manipulation zone. So there's two ways to go about it. You can enter on the 5 second time frame. So on the 5 second time frame, and this is just using we already have this indicator, the reversal indicator. So for example, and I'll look for one example on the 5 second time frame, but you look for an entry, you look for a manipulation move either to the upside or downside, depending on the direction you're looking to take the trade in. And then you wait for that buy or sell confirmation on the 5 second time frame, right? So this is one of the indicators we have, and you see pretty much it gives the buys and sells. So buys pretty much at the lows, sells pretty much at the highs for the most part, right? So if you kind of look through this, you can see for the most part a good amount of the sells are at the highs, a good amount of the buys are at the lows. Now you can either enter on the 5 second time frame or you can enter on the 15 minute time frame. So for example, here, if I turn that on the 15, no, it wasn't this one. On the 15 minute, I don't have it configured for this one, but on the 15 minute, the buy signal was on this particular candle right here. So then you can now for the Model 5, I'll be going for a 1:3 risk to reward. So I'll even be going for a higher risk to reward. So would be going for like 20 point stop loss and like 60 point TP. But anyway, I'm still working on the dynamics of that. But for right now, mostly I'll be entering. And again, okay, even today is a good example, right? Today is another good example. And let me see if I can find that okay, wait. We have a 15-minute SAR here. Give me a second. But it's not in an area of demand. If price gets to this monthly SAR, I'll be taking a buy down here. We do have a 15-minute SAR, but it's not in an area of, and also this, okay, so this to me is a good buy because we have a 30-minute sell SAR that has been formed. Okay, give me a moment here. I'm about to take the first trade right here. All right, so let me show you guys. So model 1:2. I came so close. Let me see. Model 1. uh, Price will go back up. We have an order, we have a bullish order block there. I don't want to form a, if we form a crossover buy, this trade is invalidated. I need price to push back down now. But I think price will go back up. That is what I see. So that's model 1. That's model 1, which is of course risky. Model 2, we are waiting for, so model 2 is trend change. And of course, the one we normally follow is Model 3, right? So Model 3, just wait until we enter Model 3. That's the one we use for the official trade. So that's Model 1. I think Model 2 and Model 3 will be on the same candle. So Model 2 has formed because we have a green candle. And then Model 3, I'm still waiting. So Model 3 is the one we enter for the official trade. Let's see. See. And then we might get a chance to observe how Model 5 works. So still Model 3 hasn't come in. So not yet. All right. Might be this one. It should be this candle. If it closes, nope, not yet. So we're looking for a green X. And it's fine if it keeps pushing down because the more it pushes down, the more any momentum to the upside will be. And here we have two SARs. We have an order block. I might get stopped out of the 10.1. All right. So I'm stopped out of the 10.1. So Model 3 still waiting on it. So that's the one, that's the regular one we take for a 1:1 risk to reward. Let's see. And we also have an hourly EMA there. Let's see. All right, might be. All right, so there's the green X. It might be this candle. It is a bit of a tricky entry as well, but there it is. All right, so we'll see if this pushes. up or not. Anyway, so here, the thing I like about this, we have a demand zone, we have all these SARs, and also so you can still, no, not that one, not that one. Okay. And then there'll be still model 4. I'll show you when model 4 comes in. So model 4. So model 4, we need and there you go, full TP on the 1:1 risk to reward. So full TP on the model 3 entry. So model 4 still hasn't come in, right? So model 4, we need a buy signal. And we're going for a 1:2.5 risk to reward. But again, for you guys, I normally say just stick to model 3. It's a quick in and out, 20 points stop loss, 20 points TP. But I'll show you guys the model 4 entry. All right, so let me take a screen grab of this for my journal. This is 44,353.6. 44,353.6. 1:1 risk to reward. All right, so getting back to at least some wins. SAR rejection scalp. Looking to save this. All right. So again, model 4 has still, right? Model 4 hasn't shown up yet. So model 4 would be the buy, if we get a buy signal, right? So it doesn't matter if price wants to keep, so like for example, if price keeps pushing down and down and down, and then gives us a buy eventually, that's the buy that we would take. So again, most of these models, which is typically model 1 comes first, then model 2, then model 3, then model 4, then model 5. That is how you would enter each trade in that order. And again, for model 4, you are going for a 1:2.5 risk to reward. The reason you're going for that is because it's a pretty late entry. So there it is. And of course, since this is a new account, I hadn't. Okay. So model 4 would be there. So the reason you're going for 1:2.5 risk to reward is because, and again, right? So for this one, I'm just taking it on my accounts. The only one we normally track is uh, the model 3. So for this one, the reason you're going for a 1:5 or you would go for a 1:5 is to cater for the times that you'll get stopped out. Because again, this is a pretty late entry, so you want to go for a higher risk to reward. But anyway, so for today, on the official trades, we have at least a gain of 0.75 there. So 0.75. So you can see, right? Even on the live session, Friday, we had a losing day. Tuesday we had a losing day, like two back-to-back losses. So yeah, the beginning of August has been all over the place. All right. So let's see what else is there. So EMA wise, we do have an hourly EMA. And here, model 4 would have gotten stopped out. So model 4, for me personally, for the accounts that I'm taking it on, is stopped out. But again, this is another reason why you are going for a higher risk to reward. What's that one? All right. So if we go back, so EMA wise, the next trade setup here would be on this hourly EMA. So hourly EMA 2. We can get some entries here. So 311.3, it's in a demand zone. I do see this bearish order blocks here, but I want to make sure that my stop loss is nowhere, is not like 50%. Yeah, so this one I can take this one. So this one should be good. So for this particular one, 311, so this would be 301. So 301 would be here. I'll just put it there. All right. So there's another entry. And again, I would enter in those in that same order. So model one, model two, model three, model four. 15 minutes. There's something here. Um, Give me a second. There's something. All right. This is what I was looking for earlier. So now I was talking about model five. Model 5 pretty much is dependent upon, so let's assume you know, or your probabilities are telling you, or whatever, your confluences are telling you this instrument is going to go up, right? And then you start seeing it go down. So this is a good example here. So for me, I still expect US30. Like my bias today for US30 is bullish, right? So Model 5, what I would do, and the reason I was looking here is because you see this bounce off of this 15-minute bullish order block, and you see that reaction from it. If I go to the 5-second time frame, what do I see? I see this right here. So if I saw this consolidation phase, and then I saw US30 break below and keep going down, and then I look on this 15-minute time frame and I see, okay, if US30 is supposed to go back up, and again here, we have a 15-minute SAR, we have a 30-minute, we have a monthly, we have a 4-hour, we have a 15-minute bullish order block, we have an hourly EMA. So we just have so many confluences for bullish momentum at some point, right? So here, if we have that and we expect US30 to go back up, and we do see that we had this 15-minute bullish order block there, which is where we got that big rejection. If we turn on that, where would the entry be? The entry would be here. And some of, especially this one, so for this particular one, even for me, it's gonna take a while to get it, but you have to be observant. You have to literally look for consolidation areas. So either you can find an indicator that draws consolidation zones for you, um, or you just have to be observant. So for me, I'm training my eyes to be observant to kind of, subconsciously identify those phases. So even for me, I'm definitely gonna miss initially a bunch of these entries for the AMD, accumulation, manipulation, and distribution. But once you kind of see what the market is telling you, like I always say, if you see wicks always tell you a story. But the key thing for this particular one, you have to have a bias in the market. So you have to kind of know, or you have to have confluences that US30 is going to pump up tonight or is going to pump up today. So all you're looking for, and actually, if you miss it on the 5-second time frame, you can still get it on the 15-minute time frame. So for example, if that if that has started to happen on the 5-second time frame, maybe on the 15-minute time frame, we might get maybe on the 15-minute time frame, this may be the move right here, right? So on the 15-minute time frame, maybe the expectation is to look for an entry like this. But yeah, so for the 5 seconds, for entering or for looking for that model in the 5-second time frame, it does take like you have to be keen to kind of catch it. So you can see here, even after getting stopped out of Model 1 and Model 2 for that previous setup, but Model 3 won and also Model 4 lost, you can see prices going back up. So this is what I was saying earlier. Most of the times when I get stopped out, price does not go against me aggressively. Price manipulates and then goes back up. So you can see if we turn back on this reversal indicator here, which is what we would use for Model 5 and go for a 1:3, right? So it is not the easiest to look at that move, but all you have to do the first thing for Model 5 is, and again, if you don't understand any of my previous models, there isn't even a need to even think of Model 5 or even Model 4. Let me see if there's a supply zone on this 30-minute. We have a 30-minute. No, there's no supply. So this 30-minute EMA one hasn't been tested, but there's no supply zone on the 30-minute, and there's no supply zone on the 15-minute. So there isn't any entry here based off of this 30-minute EMA. And again, so here, if we look at what I was saying earlier, you see all this bullish or all these regions supporting bullish momentum. You have one, two, three, four SARs. We have one bullish order block here, and we have a demand zone. So we might get a 15, if I get the 15-minute entry for the push back up, I will let you guys know, because as much as the 5 second one is already done, right? So that's another good thing entering on the 5 second, is that you get that early entry. So the 5 second Model 5 would have already been done, but the 15-minute is not done yet, right? Because again, if US30 is to reverse to the upside, it's good that it keeps pushing down in order to, because again, here we also have this 30-minute bullish order block right here. We have this hourly EMA that's right here as well, which again, I'm looking to take a buy here. Let me see. So this 30-minute, 30-minute, we have some SARs here, but these SARs are invalid because they are literally inside this bearish order block here. So these ones are invalid. All right, so there goes the hourly EMA. Let me see. 1:2, and I don't know if we've touched it, not yet. It's not 1:2, 1:1.5, 1:1, and 1:2.5. Um, no, that's not the account. All right. So, what am I thinking about? Should be that. 1, 2, 3. Uh, 1, 2, 3. So I'm in Model 1. I am waiting for Model 2, 3, and 4. Mm, mm, 2, 3. All right, so Model 2 and Model 3 validated on the same candle. Not the best price movement, but yeah, this might bring us back to break even for the day. But Model 2 and Model 3 validated on the same candle right there. So let's see if this is gonna hold. Model 4. So Model 4, this is the best thing about Model 4 is that, and again, that's why you're going for a 1 is to 2.5. As much as it validates later, like again, price can drop down further, but then you're just waiting for the next time you will get that buy momentum. So again, so for that particular one, uh, got taken out of models 1, 2, and 3. So that brings us back to break even for the day. So one win, one loss for the day based off of model 3. I'm still in the model 1 entry. Yeah, today is just like a crazy day. Well, this whole week. And then of course there is let me take this 44,305. Uh 4,305. A rejection scalp. Snip to save. How am I saving this to? All right. So back to break even for those. So still one more. So regardless of if price keeps pushing down and down. So for this last model, all I'm waiting for is a buy signal. And you can see already if we take or if we clear this out, you'll see we are ideally below this range, right? So the only way we'll get a push to the upside or a buy signal for model 4 is if we break this channel right here and then go back above it. Mm, mm. All right. So there actually is it's a risky. There's this hourly entry here, but I really don't want to take it. So I'll just wait for my model 4 entry. But there is an entry based off of this hourly SAR rejection here. Because and I hadn't seen that 262, 252.4, 262.5. Yeah, I'll just hold off on entering any other trade and then wait to enter this one right here. But this one will be model 4. For the other trade setups, I really don't see I really don't see any other trade setup that we can get here because the only EMA wise, there's really nothing because we've tested all these EMAs. Um, yeah, and again, that's what I was saying. This is again, this one was a tricky one because of this momentum. So keep in mind, the kryptonite to any of these rejection scalps is a trending market. So that's what you do not want. So you don't want like a continuous directional push in any way. So for me, I'm still waiting for my momentum entry or for my model 4 entry. I've only taken one, and that one lost, so I haven't gotten another one. And that's again the kind of nice thing about it is that you can get stopped out of the others, but then for that particular one, all you're waiting for is that confirmation that shows that price is actually going back to whatever the direction you were anticipating. But here, if we were to get any SAR here, it would be a tricky one because we do have this hourly bearish order blocks. EMAs, we are not going to get any EMA entries, especially now that if we do close below this 15-minute or this 30-minute EMAs here, we do have it would be a sell entry, but we have this 30-minute bullish order block. So of course I wouldn't take that. The next EMA that hasn't been retested, actually we don't have any EMA that hasn't been retested below there. So no EMA entries. So SAR entries, probably no SAR entries as well, unless price keeps pushing down and then it prints a SAR somewhere down here. But even then, if it prints any buy SAR that's next to this bearish order blocks, of course, I wouldn't take that one. We do have today's pre-market low, but today's pre-market low, personally, I wouldn't take that because the only red flag with this, it does look like a good setup. But the only red flag is this hourly bearish order block. We do have an hourly bullish order block, so technically they cancel out, and then you remain with the 4-hour bullish order block. But personally, I don't have any accounts that I take the pre-market highs and lows for, but this would be a setup there at 155.6, 145.6. No, 155.6 would be 145.6. So would be here. And that would be so that would be the pre-market low entry at 44, 145.6. So for me, the only trade I'm looking for is this. Um, Which actually, so if for me, if per my expectation, I still expect US30 to push up, but I don't have any accounts to do a Model 5. Anyway, let's just look at this. Let's visualize this. Uh, nah, we need a bigger move to the downside for this one. Uh, uh, mm. All right, so we've tested the pre-market low. Again, it's not the so as much as this bullish and bearish order blocks would cancel each other. Um, I don't know. So anybody wants to take it, you can take it at your own discretion. Okay, personally, if I had an account that I'm taking the pre-market highs and lows on, if this did validate, so we'll see. If this gets to this, personally, yeah, I would take it because we do have that 4 hour bullish order block at the top there, but you would need to make sure that, so I'll add an alert at the 10 point. Yeah, so the setup would be invalidated because it missed the 10-point threshold entry before, or it missed the 10-point threshold entry and gave the crossover buy, so gave the change of structure. So that particular one for the pre-market high and low would be invalidated. All right, so just as when was that? That was Monday. So just like Monday, what's that? It's 10:20, 10:30. So in about an hour from market open, you have a 300-point drop. So again, that's so heavy for US30. So that happened on Monday as well. I think that's when we had um actually yeah, it happened on Monday, happened on Tuesday and Wednesday, I think. Because same thing here yesterday. 314, 300-point drop yesterday. The 5th was Tuesday from market open 258, 300 point drop. Monday was the only day that had like no movement. So on three back-to-back days, price has dropped from open 300 points. So of course, markets like those, that's what you don't want for rejection scalps. But that's not pretty common, having 300 point drops in the market on market open in under an hour, because that's three back-to-back days. Right. Personally, I'm still waiting for a buy to show up. So you can see model 4, you just wait and wait until you get that confirmation that momentum is pushing back to the upside.
If you're looking to be more athletic, grab a seat.
The next zones we have, or the next SAR zones we have are down here. This were the same zones yesterday during the live session, right? Remember yesterday during the live session and I still have the alert down here. During the live session when I was waiting for price to get to this zone right here, this 4 hour SAR, and then price literally pushed back to the upside. So same thing, probably today we are going to get to it. It's only 70 points away, so it is possible. We have a 4 hour and we have a daily. I would rather take the daily because the daily is the lowest one. So this is 6. So this would be at 40. Should be at the same area. 48,996. 6. No, actually, I'm sorry. It should be at 94. Somewhere there. And still, this is still pending. So the last model is still pending. But the only way we get a buy is if we break out of this channel. So if we break out of this channel right here, that's when we would get a entry for a buy. I'm tempted to go for 100 points for this one, but we'll see. But for this one, it's 1 is to 2.5, so 20 points stop loss and 50 points TP. Oh, 50. All right. Am I tripping? Shoot. So my Model 4 will be there. Not the best that I would want, but we'll see. We'll see, we'll see. Because we do have this SARs that are down here. So we have this 4 hour, we have this daily. So price may come down. Um, so regarding just the regular, so let's see, what do we have? We have one win and one loss. Okay, so we had break even for the day, so we can still take more trades. So break even for the day on Model 3. Um, Not sure if this entry will survive. I'm still in it as much as there was this big push down, so I'm still in this. Came pretty close. But I still think price will come back down a little bit. So I don't even think this one, I will survive this one. Anyway, so if price still comes back down, there is this, what is there? There is this 4 hour SAR and there is the daily. So technically, so let's see, how far apart are they? So we have at 33 and 5. So yeah, you can take both if needed. So 33, I really don't want price. If price comes back down, of course, I'll get stopped out of the Model 4 entry. But 32 minus 10 is 22 point, so this would be 22.6. Uh, we'll see. We'll see if this one survives, but more likely, it's more likely that price will come here. Ten, 10, 1.5. Yeah, I don't think I will survive this one. Nah, I'm not gonna survive that one. All right. All right. So still at break even for the Model 3 entry. Model 2, Model 1, I have two back-to-back losses. So I have one more trade I can take for those ones. And for example, if I take a win on Model 4, I'll be back in profit. So again, the higher the risk on a trade, the more you want to do for, or the more you want your risk to reward to be. So I have two back-to-back losses for what? For Model 1, Model 2, and Model 4. Model 3, we are at break even. So Model 3 is normally the safest, right? Because you're only going for a 20-point stop loss, 20-point TP. So Model 3, we have one win and one loss. Uh, so let's see if price will come back down here. So for this one, we have two opportunities here. So we have the 4-hour entry and then the daily entry. So they are, both of them are like 30 points away from each other. So that's fine. So I think best case scenario, if you, so for me, on Model 3, I can take both of them. That's fine. For Model 1, Model 2, and Model 4, I can only take one more loss before calling it a day. So I'll just take my chances with this 4-hour one. But best case scenario, you can divide your risk into two so that you take half risk on the first one and half risk on the second one. So the beginning of this month, so August, and historically August is a pretty tough month. But yeah, the beginning of this month definitely has not been the best. So hopefully maybe in the next week or 2 weeks, there is a shift back. Because again, if you look at these patterns that I was drawing, having a 300-point drop on market open is common, but it typically doesn't come like three back-to-back days. So Tuesday we had about a 300-point drop in 1 hour. Same as yesterday, same as today. So Monday was the only chill trading day of this week because Monday you didn't have a trending market, right? So you had markets respecting um, the zones. But if you have trending markets, especially three back-to-back days, so this is again why. So even for me, like for the accounts that are taking Model 1 and Model 2, I halved my risk. So I'm not risking 1% for those accounts anymore. I'm risking 0.5% just to adapt. Because again, I'm at break even for those accounts. For a good amount of them, I was in one account, I was up like 10,000 and I'm back down to like 200,000. Um, yeah. So when I have like a losing streak like that, I'll definitely half my risk until maybe I get back to 5% or 2% in profit, then I'll go back to risking 1% per trade. But if you do find yourself like in a losing streak, so there's nothing that has changed. I literally trade the same thing I've been trading the last 3 or 4 months. Um, but unfortunately, when you have this trending markets, you have issues where you can easily um, get into a losing streak. Pretty much since the rejection scalps are counter trends. I'm not the best at trading trending markets. Anytime I try to trade trending markets, I lose way more. So I really have no reason to kind of stop doing what I'm doing. But anybody who has like trending style strategies, right? These are probably the markets to kind of look for those strategies. Man, that 1 hour candle is crazy. That is 445. That's 400 points drop right there. That's interesting. That's crazy. All right, so we've tested the 4 hour EMA. If we get a crossover, entry right now, if we get a crossover buy, yeah, so we've already gotten the crossover. So the 4 hour SAR is invalid because we tested the SAR and then printed the crossover buy here. So this trade is invalid. So the next level would be, so I go ahead and delete this alert. The next level would be this daily right here. If we break this daily, then I don't know. Then we might just keep pushing to the downside. All right, so we move this down here, here, and here. Okay, you see how crazy the market is today? These pushes are crazy, crazy, crazy. All right, so we've tested the daily. So this is the last, even after this, I don't even think there would be any trade, any other trade. Um, so the 10 point would be here. But if we get a crossover, if we get a change of structure, then that's it. This level is invalidated. And So, okay. The other thing, this is what I was looking for here. This right here is what I was looking for. This. Wait, give me a second. The I am tempted. See. See this, but it will have to be lower than that. All right, so the 10 point, of course, would be there. Then we wait for our others. Um, so on a day like this, the 10-point entry is gonna take hits, right? Because there's no confirmation um, being looked for. So on a heavy trending day like this, the 10 point you can see on a heavy trending day like this, the 10 point is going to take hits. But if there's any place that US30 should push back, or at the very least push back for 100 points, is this. Okay, so model one is out. Uh, do, 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 do. All right, so model two is right there. Oh shit. Oh my bad. Model three is in profit. Missed that. Or did we? Let's see. All right. I'll take I'm in that model three, a late entry, but we'll see. But model three validated here. I was focusing too much on the other one down there. But it's a late entry on the close of that candle, and we'll see. See, almost there. Right? So anytime you see this, so for the official trades, right? So for model three, you're looking for the X's. So if it's a buy, you're looking for the green X. If it's a sell, you're looking for the red X. So that's all you are looking for. Um, one was a late entry. All right, and then the last but not least, I think this is still, I don't know, I don't know if this one is still possible for model four. Yeah, model four is still possible to get something from it. Yeah, man, missed that model three. That sucks. So I think for me, I'll just wait for model four. This model three would have been a late entry. Like this was the entry right here, and it would have hit. The late entry would be here. So I'll see if I'll wait for the model four. But yeah, if we break this, US30 is dumping pretty heavily, maybe for the rest of the day. If you look at the 1 hour candle, the 1 hour candle is crazy. If we switch here to the 1 hour, where is that? Look at that candle. 400. So 400, close to, we're about to do maybe like a 500 point drop in an hour. Yeah, that is definitely not what we want. Yeah, so even the late entry, man, we missed that model 3 entry. But anyway, if anybody followed it, right? So sometimes maybe I'll get distracted, but you see that green X, if we get back here, or if we move this back, right? this right here is what you're looking for. That is exactly what you are looking for, right? And it pushed pretty much straight there, but I was too distracted to even see it. Anyway, so there's still one more left. But for today, that will be it. So if anybody caught that Model 3 when it came in, well and good. But yeah, so just be observing. So Model 3, all you're looking for is this axis. That is it. So sometimes I may, because I was looking for something else, I may be distracted in calling it out or a little late. But all you're looking for, if I'm looking for a buy, you're only looking for the green X to populate. If we are looking for a sell, you are only waiting for the red X to populate, and that's your entry for Model 3. So the only one here maybe I can try to find, because right here, even though we form another SAR, it would be next to this bearish order block. So there's no SAR here, because if we would form an SAR, it would be formed maybe somewhere here, and it would be in proximity to this bearish order blocks, and that is definitely a red flag. So the only other thing maybe I'll wait for is a Model 4 entry. But yeah, so for today, that should be it. It was a crazy day. Having a 500 point drop in about an hour. So I can stay on for this one, but again, like for this, the only models I track is Model 3, so the others are just internal to myself. But I mean, I can stay on and we can see if a Model 4 entry will, and we have 6 minutes, so I don't even think price, I mean, unless we get a big push to the upside, I'm not sure if price will have a big reversal up. Man, wait a minute. That was annoying here. But, anyway, that should be it for today. So we'll get back tomorrow. So hopefully tomorrow is a better day. But the only issue, like with this market, is once you have a big move to the downside, then you have like kind of another big move to the upside. So until that is done, so I would say, I mean, we are still fine even with the Model 3. We are down what 2% for this month so far. So let's see. So 2% for the month so far. Uh, yeah, so I mean, still good even with the even while risking 0.75. But for me, of course, now I'm even below break even because of the Model 1, Model 2, and Model 4 losses for the day. But yeah, so I would say if you're only taking Model 3, which is what I recommend for you guys, you should be fine. You don't have to adjust risk. But if at all you enter some of the other models with me, definitely lower, and it depends on where your account balance is. So again, most of my accounts now are just a little bit below break even. So I adjusted my risks into half. So I'm risking 0.5% for those. But for Model 3, you should be okay to keep risking 0.75 because we don't get as many trades for it. But hopefully August improves because every time there's like I have this, whether it's a losing streak or whatnot, right? It's followed by, you see, like this particular time in May when there was this day where we had two back-to-back losing days or two back-to-back losing trades. The next three or so days, it had a win streak, right? So just make sure you can survive for the long term. And that's the way to look at markets, right? So not every day will be, or not every week will be a 20K week. Some weeks, even for me, like last week, was a losing week across all of my accounts. So that's why I chose to lower my risk on the other model accounts. And then once I'm back to break even, I'll start risking 1% per trade again. But so let's see, 10:59. So this is a bit late in the day, but if I get a buy entry here, I'll enter that model for. So let's see. So I still have, so for Model 4, I still have one more trade I can take for the day, but I need to get a buy signal in the next 30 seconds. If I do not, then that is it. I'll be in the afternoon I can still trade, but I cannot trade my Model 1, Model 2 accounts because for this morning I had three back-to-back losses for that. 57, 58. All right, so it's 11. So even though a buy signal comes in, I wouldn't take that. But anyway, other than that, I will see you guys tomorrow. Enjoy the rest of your day. All right, guys. Peace.